programs that we're developing. So we welcome all of you to this webinar, and we'll get started. I'm going to let you know, too, that we are going to end promptly, both to respect your time as well as to respect the time of the presenters that have 11:30 meetings following this. If for some reason we don't get through all of the questions and comments at the end, rest assured that we will either respond either as appropriate, either directly to the questioner or commenter, or in an FAQ type format posted on our website. So we will make sure that we address all questions and comments, even if we don't have time allotted within the 60 minutes. So we're glad for your participation on our webinar today. Just so that you know who is in the room here at CPCFA, I am Renee Webster Hawkins, the Executive Director of CPCFA. With me, I have Elena Miller, our Deputy Executive Director, Janie Davis, our Outreach and Strategic Development Manager, the two program managers of our CalCAP program, Doreen Smith and Bianca Smith. We also have Jason Bradley, the program manager for the Electric Vehicle Charging Station CalCAP program, and we also have staff analysts that many of you are familiar with. During this presentation, you are in the mute mode on the telephone. You can chat with us at any time during the presentation through the chat feature of GoToWebinar, and then depending on the nature of your comment or question, we may answer your question quickly through that chat feature, or we may save it to address orally at the end of the presentation during our time for questions and comments. We do have a fair amount of material to be covered today that's important for you and your colleagues to be informed about as participating financial institutions in the CalCAP programs. We often get individual questions from lenders about the subjects that are covered in these webinar conferences. So for your convenience and reference, we have the archive of each of our lender roundtable agendas and presentations on our CalCAP web pages. We hope that you are making it a regular practice to review those materials, and certainly to have new loan officers or analysts review the materials to increase their understanding of the CalCAP programs. If you have colleagues that cannot attend today, please be sure that they take the time to view the presentation and listen to the recording online once we post it later this week. So today our agenda is going to cover the following topics: program milestones and accomplishments, our switch in our trustee institution from U.S. Bank to Zions Bank, existing program updates as well as updates about our newest programs, an estimated schedule for program rulemakings, a discussion on the progress of our online enrollment application, and some other administrative items and reminders as we wrap up this calendar year. And lastly, we will have time for your comments and questions, or we will respond after the webinar as appropriate. So, starting with the program milestones and accomplishments, we have many. Again, it's been a record-breaking year in our programs in terms of volume, and we certainly appreciate all of your attention to detail in making sure that your loan enrollment applications and claim applications are correctly filled out, because it just increases the efficiency on our end in being able to process those applications. In our CalCAP Small Business Program, so far to date, we've funded 1,731 loans compared to a total of 2,089 in calendar year 2015. So we're on par to meet that amount from last year. We did have 66 claims filed so far in this calendar year under the CalCAP Small Business Program. In our collateral support program, we funded 22 new loans year to date compared to a total of 32 last year. And we did have one claim filed during 2016. And also in our Air Resources Board Heavy Duty Vehicle Program, we have funded to date 3,520 loans so far compared to a total of 2,830 loans in 2015. That is a significant increase in volume and total loan enrollments, and we certainly appreciate how this program is helping you leverage our credit enhancement to increase the access to your private capital through lending through your institutions. Claims were up in our ARB program. So far, we've accepted 179 claims this year. For other program milestones and accomplishments, we're going to be having more of a description of each of our new lending programs a little bit later in the webinar. But just to recap at a high level, our CalCAP electric vehicle charging station financing program, which was launched in 2015, we do have 10 lenders enrolled, and we are working with stakeholders in the electric vehicle infrastructure marketplace and trying to identify the best way to utilize that credit enhancement to incentivize installations of electric vehicle charging stations at small businesses in California. If you have any questions about the program, please call us, because we certainly would like to see whether or not lending to small businesses for this purpose is a good fit. For our CalCAP Americans with Disabilities Act financing program, the program officially launched in August 2016, and we so far have 3 lenders enrolled. And lastly, our newest program, the CalCAP Seismic Safety Financing Program, we are in the process of finalizing the emergency regulations and are hoping to begin accepting applications in early 2017. Again, this is a loan loss reserve program for building retrofits to ensure seismic safety of buildings in California, and it's available for loans on both commercial buildings and many residential buildings. And again, we'll have some more detail on that later on in the program. Lastly, I do want to announce breaking news. I just received, prior to coming into this webinar, an official offer from the U.S. Treasury for a 4th tranche of funds for the State Small Businesses Credit Initiative program. For those of you that have been with us for some years, you know that California received $168 million about 5 years ago to increase our credit enhancement programs. We share that funding with the infrastructure bank run by the governor's office, and we've used that funding to enhance our loan enrollments in both our CalCAP small business program as well as our to create and fund our collateral support program. As the U.S. Treasury is winding down the SSBCI administration at the federal level, they did have some extra money, about $6 million, I'm told, that they were able to redistribute to the higher performing states. And so the state of California is being offered approximately $643,000 additionally for our SSBCI programs, which again we will share with the iBank, and we will be anticipate accepting that funding pending board approval by the authorities board, and so we'll have that extra funding to supplement our already robust amount of funding that we've had for our SSBCI programs. So with that and those program highlights, again, thank you all for your participation and ensuring the increased access to capital to our small business community. And with our seismic safety financing program, we're going to be venturing into a credit enhancement model for lending for residential buildings as well. So all of this is good news for the marketplace in California, and you all play a pivotal role. And so with that, we're going to get a little bit into the weeds with our program administration, and I'm going to hand it off to Doreen to discuss our transition from U.S. Bank to Zions Bank as our CalCAP trustee.
Thank you, Renee. Good morning, everyone. As many of you are aware, CalCAP will have a contract with the new trustee, Zions Bank, effective January 1st, 2017. Lenders should continue submitting monthly and quarterly reports on a timely basis to substantiate and validate the data prior to the transfer of accounts from U.S. Bank to Zions Bank. CalCAP staff will be having a kickoff meeting with Zions Bank later this week when we will discuss the logistics and the timing of the transition. In mid to late December, we'll advise lenders of a cutoff date for transactions with U.S. Bank. Your loan enrollments and claims should continue to be submitted to CalCAP during this transition, though at some point there will be a brief suspension to contributions and payouts. CalCAP will keep lenders updated as instructions and dates are determined, but we do anticipate a smooth transition. And next, I wanted to update you about a change in contribution rates to our small business program, small business financing program, and that is that effective April 1st, 2017, the borrow and lender contribution rates will change. The new contribution rates will be 2% to 3.5%. This is an increase in the minimum contribution amount from 1% to 2%. And this is change is pursuant to Health and Safety Code 4459.4D, which states that when making a qualified loan that will be enrolled under the program, the participating financial institution shall require the qualified business to which the loan is made to pay a fee of not less than 2% of the principal amount of the loan, but not more than 3.5% of the principal amount. The financial institution shall also pay a fee in an amount equal to the fee paid by the borrower. And now I will pass off to Bianca to discuss the ARB On-Road Heavy-Duty Vehicle Air Quality Loan Program.
Thank you, Doreen. Good morning, everyone. As some of you already know, given the popularity of this program, in June of this year, ARB's board approved a $22 million allocation for the fiscal year 2016-2017 for the ARB program. At the same time, discussions with ARB indicated that additional funds, especially in this amount, are not to be expected in the future. As such, the amended interagency agreement with ARB also includes directions to establish procedures via regulations to recapture contributions from lenders' loss reserve accounts annually when enrolled loans have matured to assure program sustainability. The current proposed recapture mechanism in the interagency agreement directs CPCFA to recapture contribution funds from a lender loss reserve account on an annual basis upon maturity of enrolled loans. These funds will be returned to the program account to support future contributions for eligible loans and administrative costs. Recapture will not apply for contributions on defaulted or charged-off loans for which a claim has been approved, unless the amount recovered through the liquidation of the collateral exceeds the approved claim. In cooperation with ARB, we do encourage lenders to submit comments to the current proposed recapture mechanism and alternative options that would assure program sustainability, which a few of you have already done. We are also planning on bringing in a financial advisor on board for expertise on the recapture structure and also for the reevaluation of the existing contribution rates for the specific thresholds. And with this, I am going to hand it over to Jason for a quick review of the CalCAP EVCS financing program.
Thank you, Bianca. Hello, my name is Jason Bradley. I am the program manager of the Electric Vehicle Charging Station Financing Program. This CalCAP program provides businesses with 1,000 or fewer employees and lenders incentives to finance electric vehicle charging station installation at their place of business and at multi-unit dwellings. Currently, we have 10 participating lenders who are enrolled, and right now is a exciting time for the program, as there's been push at the public utilities level to authorize investor-owned utilities to start their infrastructure, their charging station infrastructure programs. So what staff has been doing over the last 6 months has been, collaborating with these investor and publicly owned utilities to figure out how the charging station program can provide the upfront capital needed for businesses to participate in the investor-owned utilities programs. We've also been reaching out to local governments and business associations to spread the word about the program. For those of you who are unfamiliar with the program, I want to go over the contribution rates. And I want you to keep in mind that these contribution rates are 100% paid by the authority. So for each loan enrolled in the charging station program, it will receive a 20% loan contribution rate in the loan loss reserve. If the charging station is installed in a disadvantaged community or in a multi-unit dwelling, the contribution will increase by 10%. So if there's a 30% maximum total contribution for the loan. And the way we incentivize business owners to participate in the program is providing a rebate. That rebate will be half of the loan loss reserve contribution. So on a 30% contribution, the rebate will be 15% will go directly to the small business owner, and the remaining 15% will stay in the loan loss reserve to cover future claims or losses. So if you have any questions, please reach out. My contact information will be at the end of this presentation, and we also have information on the CalCAP EBCS website. Thank you.
Hi, this is Bianca again, and I'm going to give you a quick refresher on the CalCAP ADA program, since this is a new implemented program. As you know, some of you know, Assembly Bill 1230 was signed by Governor Brown in October of 2015, and it provided CPCFA a one-time $10 million appropriation to create the CalCAP ADA program. Loans can be enrolled in the program to support physical alterations, retrofits, and other improvements to increase access and comply with the Americans with Disabilities Act. The program is aimed at California's smallest businesses. Therefore, to be eligible for the program, a small business must have no more than 15 full-time employees. The facility must be less than 10,000 square feet, and the business must have a total gross annual income of $1 million or less. In addition, the small business cannot provide overnight accommodations, so hotels and motels are not eligible for the program. The program institutes a $50,000 limit for each enrolled loan and offers coverage under the program for up to 5 years. The CalCAP ADA financing program introduces specific elements to the CalCAP's existing programs, such as CPCFA's contributions, which is equal to 4 times the amount of the lender's contributions, the recapture provision after 5 years, and changes to the definition of small business, and technical requirements that the borrower must meet, such as the CASP report, or the Certified Access Specialist report, and the cost estimate for eligible projects. The program is up and running since August 29 of 2016, and so far 3 lenders have opted to participate in the program and help the small businesses become ADA compliant, keep their doors open, and increase their customer base. We are actively collaborating with the Office of State Architects, the Commission on Disability Access, GoBiz, local governments, and statewide small businesses associations for outreach. On the next slide, there's a summary of the contribution rate. And so just as a quick reminder, the lender contribution rates are between 2 and 3.5%. The borrower contribution matches the lender's contribution, so again, between 2 and 3.5%. CalCAP ADA contribution is 4 times the lender contribution, so between 8% and 14%. And if the business is located in a severely affected community, there will be an additional contribution equal to the lender's contribution, which is, again, between 2 and 3.5%. The maximum total contribution that can be deposited into a loan loss reserve account will be 24.5, and the maximum CalCAP ADA recapture at maturity or 5 years, whichever is first, will be a 17.5%. Also, we do encourage you to visit the CalCAP ADA webpage for more information, or to just call us or send us an email. We'll be more than happy to assist. And now I'm going to hand it over to Elena to talk about the CalCAP Seismic Safety Financing Program.
Thank you, Bianca. Good morning. I'm going to be discussing our newest program under development, the Seismic Safety Financing Program. CPCFA received a $10 million one-time appropriation to fund the CalCAP Seismic Safety Program through SB 837, which was signed by Governor Brown in June of 2016. This program incentivizes private loans to residential property owners as well as small businesses to support seismic safety retrofits that are performed on or after January 1st of 2017 for a qualified building in order to substantially mitigate seismic damage. Qualified buildings for this program include mobile homes and multi-unit buildings that are certified by the appropriate local building code enforcement to be at risk of collapse in the event of an earthquake. The amount enrolled in a CalCAP seismic safety program is limited to the eligible costs, which are identified in the statute as well as the draft regulations for seismic retrofit construction. And the amount enrolled cannot exceed $250,000 per borrower, and the loan loss reserve coverage is set by statute at a maximum of 10 years for this program. The draft regulations I'd like to highlight are posted on our webpage. If you haven't had a chance to look at them, please do so. We're requesting public comments. We've asked for public comments by the 30th, which is tomorrow. If you have questions about the regulations, I encourage you to call me. Many others have. Feel free to call me today. And please also consider commenting in particular to the lenders about the timing of obtaining the permits and licenses which are required from the local building department in relation to the disbursement of loan funds by the lender. We are particularly interested to know if the lenders have a unique perspective that might educate us in how we would rewrite or edit the currently posted draft regulations. On November 7th, CPCFA posted notice of an informal public workshop, which was also a statewide webinar that took place on November 16th to explain the draft regulations and to seek public comment. On November 14th, a draft of the proposed regulations was posted on our website and announced through the listserv. On December 6th, staff will post a notice of the emergency regulations to provide an additional 5-day opportunity for public comment on the proposed text of the regulations. And on December 13th, staff will brief the board and recommend the adoption of the emergency regulations. If approved, the emergency rulemaking will be filed with the Office of Administrative Law the same day, beginning a formal 5-day public comment period, which is estimated to end on December 19th. And below, you'll see that there's information on how to find more information about the program on our website. This next slide highlights for you points that are identified in the draft regulations for contribution rates. In this program, as I stated earlier, the statute allows for loan loss coverage of up to 10 years. What you're seeing in this slide is assuming a loan that is enrolled for 5 years or 60 months or less. We are incentivizing loans to be enrolled for 5 years or less. And to do so, here's what we're proposing in our draft regulations. A lender contribution rate of 2 to 3.5%, matched by the borrower contribution of 2 to 3.5%. CalCAP will then utilize the funds in the seismic contribution program to contribute an additional 4 times the lender contribution. So that would add an additional 8 to 14%. And if the loan is funded in a severely affected community, there will be an additional contribution by CalCAP Seismic Safety of 2 times the lender's contribution, which adds an additional 4 to 7%. For the maximum total contribution deposited into the loan loss reserve account of 16 to 28% of the enrolled amount. CalCAP Seismic Safety will then recapture at the maturity of the loan or 60 months, whichever occurs first, the 12 to 21% contributed by the CalCAP Seismic Safety Program, which will allow for the 4 to 7% contributed by the lender and borrower to remain in the loan loss reserve account. This next slide highlights loans which are enrolled in the program for 61 months up to the maximum allowed of 120 months or 10 years. Again, the lender contribution and the borrower contribution remain at 2 to 3.5%. In this case, CalCAP's contribution would be 3 times the lender contribution, or 6 to 10.5%. And if the loan is funded in a severely affected community, there is an additional contribution equal to the lender's contribution, which would be an additional 2 to 3.5%, which allows for a maximum total contribution to be deposited of 12 to 21% in the loan loss reserve account. At the maturity of the loan, or 120 months, whichever occurs first, as is stated in the statute, 8 to 14% contributed by CalCAP Seismic Safety will be recaptured. Again, the purpose of recapturing those funds is to be able to enroll more loans in this program. And remaining in the account would be the 4 to 7% contributed by the lender and borrower. To give you an idea of dollar amounts correlating with hypothetical scenario, we've provided this slide and the next one. This first slide would be for a loan enrolled for a term of 60 months or less. That's, again, enrolled in our program. And assuming that the lender enrolls for the maximum amount of $250,000. The lender in this scenario would contribute 3.5%, and the borrower would match at 3.5%, each in the dollar amount of $8,750. CalCAP Seismic Safety's contribution would be 14%, or 4 times the lender contribution, and that would add a $35,000 contribution to the account. Again, in this hypothetical, we will assume that the loan is funded in a severely affected community, which would add an additional CalCAP contribution of 7%, which will bring an additional $17,500 into the account, for the total CalCAP Seismic Safety contribution of 21%, or $52,500. That $52,500 would be recaptured at 60 months or less, and the $17,500 contributed by the lender and borrower would remain in that loan loss reserve account. This last slide that I'll present to you assumes that a loan will be enrolled in the program for 61 to 120 months or 10 years. Again, assuming in this hypothetical that the loan would be for the maximum allowed amount of $250,000, the lender premium contribution at 3.5% would be $8,750, and the same amount contributed by the borrower. CalCAP's contribution would be 3 times the lender contribution, or 10.5%, which would contribute $26,250 into the loan loss reserve account. And again, in this hypothetical, assuming that the loan is funded in a severely affected community, there would be an additional 3.5%, which is matching what the lender's contribution is, for an additional $8,750, bringing the total CalCAP Seismic Safety contribution to 14%, or $35,000. And that $35,000 would be recaptured at month 120 or less, which allows for more loans to be written. And remaining in the loan loss reserve account would be the $17,500 contributed by the lender and borrower. Now I'll hand it over to Doreen Smith for an update on CalCAP's program rulemaking.
Thank you, Elena. CalCAP has been and is currently in the process of updating regulations for all of our programs. So we're providing you with our anticipated schedule. So as you can see on the slide, the dates are as follows. For the EVCS program, emergency regulations were approved on March 30th, 2015, and the permanent regulations approved November 2nd of 2015. For the ADA program, the emergency regulations were approved August 29th, 2016, and we estimate the permanent regulations will be effective February 29th, 2017. Seismic safety emergency regulations, we estimate will become effective December 27th, 2016, and then the permanent regulations effective June 30th, 2017. For both the SSBCI and ARB programs, the emergency regulations we estimate will be effective March 31st, 2017, and the permanent regulations September 30th, 2017. Now, notifications of the proposed regulation changes, including webinars and other outreach, will be posted on our website and sent out via listserv. So be sure to sign up for listserv on the CPCFA website to receive these notifications. And we are, as always, accepting all comments and suggestions for all program rulemaking. And now I will pass off to Bianca. Thank you.
Thank you, Doreen. So we have updated our claim application form, and this new updated form will become effective December 1st, 2016. The 2 updates that have been made are highlighted in yellow, And the first one is just a minor edit to remind you, and especially the newly enrolled lenders, what documents to attach to the claim form when submitting it. And it should include, every claim should include a complete transaction history report, a short narrative of the loan history, any receipts or bill of sales if applicable. The second edit pertains to you, the lender, acknowledging that the claim is for a loan that is still in your portfolio and has not been assigned, transferred, or pledged to another entity, and has been added, and this edit has been added for a more effective monitoring and auditing of the CalCAP program. We are aware that sometimes financial entities are negotiating loan pool transactions, and CPCFA has the authority and has in the past authorized financial institutions to negotiate and identify amounts of the loan loss reserve to be transferred with specific loans as part of a negotiated pool. Our role in authorizing such assignments or transfers is to ensure that the purchasing institution is qualified and enrolled as a participating financial institution in CalCAP, to manage the partition of the loan loss reserve, to identify the loan loss reserves to be charged, and the PFI to be remunerated if a claim is made on a transferred loan, and also to carry out our long-term monitoring and audit of loan loss reserves and enrolled loans. Loans sold or transferred from a PFI without authorization are not considered enrolled in or covered by CalCAP. For your convenience, we have also updated a quarterly report spreadsheet with a new column to reflect whether a specific loan issued by the PFI and enrolled in the CalCAP program is still in the PFI's pool. The next slide is a brief update on the online loan enrollment application. And currently, we have several lenders who are participating in beta testing. So far, we have tested the lender registration and account activation and have fixed minor errors. And starting today, the testers can start submitting real applications, and we are going to work with our IT department to fix any glitches. At the same time, we are developing our internal policies and procedures for the intake of the online applications. We are anticipating to go live and accept automated enrollments starting February 15, 2017, and we will try to accommodate everybody in accepting a dual submission track for an estimated 6-month period. Meaning, you as the lender can either submit your application as you are accustomed to by sending it directly to the CalCAP inbox, or you can send it through the automated system. We will send out exact dates and directions on how to activate or register your account and what to expect as we get closer to the live enrollment. And with this, I'm going to hand it over to Dorina.
Okay, thank you, Bianca. Lastly, we have some administrative items and reminders for you. Continue with your timely filing of your quarterly reports and monthly statements, especially with this trustee transfer that will occur at the end of the year. This will enable us to validate data and have a smooth transition. Monthly statements are due on the 15th day after the close of the month, and quarterly reports are due 15 days after the close of a quarter. Also, you can plan ahead that we would need updated information for 2017. So as seen here, we would like an authorized signers list. So please submit that on your institution's letterhead with the date signed and the names, titles, and signatures of any authorized signers at your institution. If you're participating in our SSBCI programs, we need you to sign the SSBCI certification for 2017, and the link where that can be found on the website is listed here. Also, we would like updated lender contact information, and you'll see we've detailed here that we would like several contacts. The main contact, who's the primary contact at your institution for CalCAP, The public contact is who you would like us to list for the public to make inquiries at your institution. A financial contact, a mail recipient, and if you have other people that you would like added to an email list, please let us know those people also. Okay, and the last slide is all of our contact information, so feel free to send any general inquiries, as always, to the CalCAP inbox, but each of the program managers and Elena, our Deputy Executive Director, are listed here. You can contact us individually with any questions or concerns you have. And we thank you very much for participating today, and we'll take any questions at this time.
Okay, the first question we have is what amount of notice will be provided for the ARB recapture program?
What amount of notice? So far we have received several comments from some lenders, and we will, there will be the regular rulemaking process as we move along, but we're also going to have an additional roundtable to discuss any issues with the proposed regulation. Hope this answers the question.
Okay. The next question, how much is remaining of the $22 million as we end 2016, and how long into 2017 do you anticipate the program to continue? This is for ARB.
We don't have the exact figures at our fingertips at the moment, but we're about halfway through the $22 million allocation for the year. So it is, you know, as we shared with you the statistics earlier, our loan enrollment volume is up, and we have the newly introduced tiered contribution rates that were an attempt to at least mitigate the expenditure of funds, but we're so far we're spending the funds at a healthy proportion. So we do. That's why ARB is asking us to recalibrate the program, because the important program objective from ARB's perspective is that this program continue to be offered. They're recognizing a continuing need to be able to assist small businesses with swapping out their diesel trucks with cleaner burning trucks for decades to come, and they are imploring us to find ways to mitigate the expenditure of the funds we've received over the last 5 years, so that we can turn them into a more sustainable program and loans into the future. So we are expending the funds almost at the rate that was expected when they allocated the $22 million.
And then the next question, will lenders have access to a list of properties that have been identified as having to be retrofitted for the seismic program?
So that's a good question. As with all of our programs, CPCFA is not proposing to be a program administrator on the policy or the front end of these deals. As with all of our CalCAP programs, we administer the program primarily for your benefit in identifying borrowers that you're interested in and providing access to capital for. That said, we are doing extra outreach than we normally do with other of our programs, so we can understand the market better. The short answer, though, is no. There's not going to be a centralized database of properties identified as being at risk of collapse. That need will be driven by the property owners themselves. Our role will be to figure out the best way to market this program so that those property owners, as well as the local planning officials that support those property owners, know that the program exists and know how to get them in touch with participating lenders in the program.
This is Elena Miller. I want to add one other additional point. There are 2 large cities in the state of California that have already passed ordinances requiring retrofits to be done on buildings that were identified in recent years by those cities in tandem with the ordinances that were passed. The cities are Los Angeles and San Francisco. I would recommend, if you are interested or inquisitive, to go to the local government websites for both of those cities to see what information is made available by those cities. But as I identified in at least one of my slides today, and certainly at the workshop last week, this program is built around what local government and the building code enforcement individuals for local government deem necessary.
It's an important point as well, because again, our programs are designed to help you as lenders provide capital to small businesses, and in this program's case, residential building owners as well. We don't in any way want to become an agent of a regulatory program or require any kind of regulations or restrictions of any kind. And that's why, as earlier Elena mentioned, we are very interested in your perspective about the potential timing that we would accept as eligible in a borrower obtaining that certification from their local government as their building being in danger of collapse. Because outside of LA and San Francisco, where there are not currently regulated programs set up, obviously that's going to be a sensitive issue for a property owner to do, to approach a building official and ask them, for purposes of participating in this program, to essentially deem their building in danger of collapse. We in no way want property owners to feel like they have to receive that determination prematurely. We would, if not required by some already existing regulatory program at the local government level, we would hope that they could obtain that very close in time to you as the lender distributing the loan, so that there's no exposure that they might have to having their property certified in such a way and then not be able to finance the required retrofits.
Okay, the next question. Why will the lender and borrower contributions stay in the loan loss reserve and not be distributed back to the lender and borrower?
The CalCAP statute provides that all funds in a loan loss reserve from the time they're contributed into the loan loss reserve fund are the property of the state.
Next question. For the ADA and seismic loans, all state contributions may be recaptured. Is this going to happen to the SSBCI program also?
I'm sorry, can you repeat that question?
Yeah. For ADA and seismic loans, all state contributions may be recaptured. Is this going to happen to the SSBCI program also?
So we've been sharing with you for quite some time that for both our ARB programs and our SSBCI programs, that the funders have challenged us to make those programs sustainable over the long term, and for the funding to in some way be recycled for future funding of loans. As you may well know, the state's loan guarantee program operates on this principle. When we established the collateral support program with the SSBCI funds, according to their requirements to create sustainable programs, we built recapture into that program. As we've shared with you, the funding from ARB will not continue at the levels we've enjoyed in the previous years. And that's been made clear to us from the senior staff at ARB, who are responsible for recommending funding levels to their board each year. So that is why they have directed us in their latest interagency agreement to establish a recapture provision. Similarly, with our SSBCI program, we are challenged to make that a sustainable program, and recapture is certainly one way. If there are other proposals and suggestions that you have to make sure that our SSBCI seed money can last for quite some time after the currently enrolled loans mature, we would love your suggestions.
Okay, next question. Quarter 4 2016 reports for ARB are due on January 31st, 2017. Are these dates being changed by the move to Zion?
No, the quarterly report dates will remain the same.
Next question. Can you give us more details about the financial advisor you will be bringing on? What do you anticipate their role to be?
We will be releasing a public request for proposals for that role.
For the small business program, can lender pay the borrower fee and vice versa?
We do have procedures that allow for the borrower to pay the lender fee. We have a form that's available on our website, so that the lender provides to the borrower to put them on notice that they're aware that that's the arrangement being made. If you have any questions about the technical aspects of that procedure, please contact us either through the CalCAP email box or with an analyst that you're regularly doing business with, and we'll walk you through that process.
Next question, where are the specifics for the ARB recapture program located?
Currently, the provisions for the ARB recapture directive are in our interagency agreement with ARB.
Is there a public process involving lenders for rulemaking related to the CalCAP/ARB program?
Absolutely. All rulemaking is public, as well as for those of you that have been with us for some time, you know that we go beyond the requirements of the state rulemaking procedures, and we regularly engage in these kinds of lender webinars, other stakeholder webinars, and lots of informal outreach to make sure that we're receiving as much input as we can. So the short answer is yes, it's a very public process.
Is the emergency regulation dates for March 31st, 2017 for the SSBCI going to implement the recapture for the state's contribution amount?
We haven't started the public process for that yet, so we have no idea what those regulations will include. We certainly have some administrative items we would like to address in the SSBCI regulations as a result of the transition from federal oversight of the funds to what we view as quasi-federal oversight over some of the funds, and then ultimately state oversight of the funds. So we'll need to address a fair amount of administrative issues, but these will all be scoped out as we announce the outreach and the scoping of those regulations after the first of the year.
Next question. When do you anticipate lenders will be available to fund, specifically for seismic retrofit loans?
Our rulemaking calendar has been driven by the statute, which has directed us to make the program available as of January 1st. So as soon as the draft regulations are approved by OAL and filed by the Secretary of State, we will be able to fund loans based on your application.
Next question. Is the ARB interagency agreement available for public consumption?
Absolutely. It's a public document.
On the website? Is it on the website?
We'll make sure it's on our website under the ARB lender resources. Just so you know as well, all of these interagency agreements are presented at public meetings to our board, and so that our information on our interagency agreements with any agency, including ARB, are regularly publicly noticed.
The presentation will be uploaded.
So as just to follow this, this webinar, this presentation will be uploaded to our website as well, along with all of our other lender webinar presentations, and it will be up by the end of the day. And we also will be able to make available recording of this presentation as well. So all of these resources will be up, so you'll have access to the slides. And it does look like we've made it through all of the questions, we believe. So if you believe that you've submitted a question that hasn't been answered, please let us know after the webinar and we'll get your question answered promptly. We appreciate you joining with us today and keeping pace with us as we're going through the new program implementations and these program changes. Please do, we can't underscore enough, please do sign up for the listserv. That's our primary way of communicating program events and program information to you. If we post information on our website that you need to know about, we'll post it, we'll announce it through our listserv, especially as we're approaching the transition in our CalCAP trustee. There's going to be important information for you to be aware of, just to make sure that that transition goes as smoothly as possible and that contributions don't somehow get lost in the transition. That's our primary focus, to make sure that that fact of the transaction and the transfer goes as smooth as possible. So please do sign up for the listserv if you haven't. Make sure your colleagues have access to this information if they weren't able to join us live this morning. We appreciate your support and continued participation, and hope the rest of your calendar year stays safe and sane for all of us. Thank you. Goodbye.